Hello everyone, welcome back to my YouTube channel and I hope all of you are doing great. So in today's video, we'll be taking a look at few of the stocks that are forming a bottom, and we'll be looking at what to all the signs that you need to look for when a stock is forming a bottom and what is the right time to buy such stocks. So Standard disclaimer, I'm not a SEBI registered analyst and any stock discussed here is not a buy or sell recommendation. Please consult your financial advisor before taking any trade or making any investment. So let's start with the first pick that we have today. And The name of the stock is Aegis Logistic. Full disclosure, currently invested in this stock, and this is not a recommendation. This is just for education purpose, to help you identify how to find such stocks that are forming a bottom, and uh, that using that opportunity to be able to buy a stock at the right time and the cheaper price, because if you see, even if we talk about the investment, sometimes the waiting period is too long that people get frustrated. And right, as you can see here, the stock has been just consolidating since August 21, and I'm sure you have seen the market. During the same time, the market was going up at least till October 2021, and the stock was falling from June 2021, and since August it has been just consolidating in a range. So it's kind of frustrating unless you, and even if you, and if you are not really confident about the business, then in my opinion, incorporating some technical analysis uh, in your arsenal is really important. So for that, we'll be taking a look at how you can identify such bottom formations. Let's first take a look at the broader trend. And as you can see, this stock was in an uptrend uh, since the March lows. It formed a bottom back in March around 100 rupees something, and after that it was in a complete uptrend, and the stock made a high of 387. And after that it started facing some problems here. As you can see here, it started facing some issue here, and then a breakdown, and then the stock fell from 387 rupees to down to 165 rupees. That is equal to the fall of around 56-60%, around 56%. So that is around a fall of 56%. So if you remember that Stan Weinstein video about the stage analysis, and if you haven't watched the video, I'll leave the link in the description. You should really watch that video and learn about the stage analysis. So if you remember about the stage analysis, then I'm sure you know about the stage one. That is the, I'm just gonna give a brief here. So stage one, that is the uptrend. Sorry, my bad. The stage one, that is the consolidation, first consolidation, and after that we have the for stage one is also called the accumulation stage, where the people are, the big institutions are accumulating the stock, and it's just trading in a range after a steep downfall. And then we have the stage two, that is the uptrend. That was here. As you can see, it is a complete uptrend. Then we have the stage three, where that is the distribution, where the institutions and the people who bought in the beginning start selling, and once the price breaks down a base that has formed during the stage 3, then we have the stage 4, that is the downtrend. So in this stock, in this chart, you can clearly see all the stages playing out. There was not the stage 1 as I had expected, because the COVID crash was very steep and very fast one, and the market also quickly bounced back. And this is the typical stage 2 uptrend. As you can see, the stock went from 100 rupees to around 387. Then we had a small distribution that started in June 2021 and ended in July. So 1 month distribution, and after that the stock broke down. As you can see, if we go down to the daily chart, you can clearly see here this was the high the stock made, and after that a normal pullback, and again price started going up and tried to cross the high. Wait a second. Yeah, so price tried to cross this high, but look at the size of the candle. The breakdown was very sharp. Look at the follow-up candles and look how beautifully after that the downtrend started. So this is your typical stage 4 downtrend, and what happened after that is interesting. Like there was a sudden jump. As you can see here, there was some big buying. Because why there was some big buying, maybe from the institution or maybe from the promoter side. Look at the volume, right? Compare it with the average volume. Look at the volume bars before this, and look at this candle. Look at the size of the candle, and look at the volume. Look at the volume. So it's just typically signifying that there was some big institutional buying that happened during this level. But if you see, uh, the price failed to cross this level, that is of 252. And why is that? If you see here, one thing, there's a gap present, right? So there's a gap present, and this gap, the boundary of the gap always acts as the resistance and the support. Both the boundary of the gap act as both the support and the resistance. And as you can see, the price, after this big buying, the price tried to come up but again failed to cross this level. And currently the price is still below the 30-week moving average, that is equal to almost 175 days moving average on the daily chart. And if you see, after that again price started declining, and again it declined sharply during this area. But again, if you see, look at the next two candle, the selling was quickly absorbed, again suggesting that there's some institutional buying going on. Like there are some big hands that are accumulating the stock, because it's hard to just quickly absorb the selling, this steep selling. The stock fell from 225 rupees to 165 just in 2 days. In just 2 days, these two volume bars, look at the volume bars and look at the candles, the whole the selling was absorbed. And after that again a small uptrend started here, and again the price tried to cross the, wait a second, again price tried to cross the level. If you see here, so if you see here, after the absorption of this whole selling by these two candles, the price again started coming up. But currently it was still below the 30-week moving average, that is the blue line here. But if you see here, the price again crossed this level, and again if you see, one thing very interesting, again if you see, again price faced the resistance at the same level, that was around 247 to 252. Again, look at the long wick. This, look at the doji here, doji candle forming here. If I remember correctly, this is called, this candle is called the gravestone doji. That signifies, or you can call it the shooting star. You can just call it the shooting star. That signifies bearish. And the what increases the significance of these candlestick patterns is when they are formed at the support or the resistance level. So here the shooting star was formed right at the resistance level, and the price again went back. Again, if you see, another large candle combined with volume, again signifying that there is some buying from the big institutions happening right now. And if you see after that, if you see the price, after that the price never fell back down to this level, that was 167. And if you see, the price just started contracting in a very narrow range. Look at the volume here, the volume suddenly decreased. Look at the size of the candle, so many doji formations. Look at the size, just look at their size, indicating the price contraction, that there's not enough selling left, and all the selling is absorbing, and there's some still buying going on. And then once the whole selling is absorbed, look what happened. Look at the size of the candle. In just two candle, the price finally crossed the level of 252. And look at the size of the candles, and after that this price is consolidating right above the resistance zone, and the pullback is not even deep. And look at the volume combined with the these two candles, indicating that there's some strong buying happening in this region. So if you remember the stage analysis, again, I'm talking about the stage analysis. So this is what your typical stage 1 consolidation looks like. So what are the things you need to look for? The price has stopped falling, it has made low, and there's a comeback, the absorption of the selling. The price is just consolidating in a range, even though the whole market was falling this time. During this whole move, the market was rising, and after that the market started falling and the stock started consolidating. So the market is falling and the price is just consolidating in a range. It has formed a well defined range, as you can see here, with 252 as the resistance zone. Price tries to cross the resistance multiple times, and the 30-week moving average is now flattening, as you can see here. After the downtrend, the moving average started flattening, and then finally we have a breakout above the 30-week moving average, above the well-defined region, that is our resistance level. So this is indicating a reversal. So I'm positive on the stock as long as it is above this level of 247, as the price should not come down. And even if comes down like this, I need a very short pullback. Like, the price should suddenly jump again. It should not get back within this range and starts consolidating again. That is not the favorable price action. uh, a normal jump, a normal dip, a small dip is expected, and that is the very normal reaction that a stock gives after a breakout. So that is expected, but I don't want the stock to come down and just start consolidating again. That means the breakout was a fall zone, but that is something that we have to see, and for that we have the stop loss placement to manage the risk. So in this case, as I'll keep my stop loss at this level, 238, because if the pullback is deep enough, then I don't want to, and I can always enter again. Like, there's no restriction that I can't enter a stock, right? So I can always enter again. So that's why I'll be keeping my stop loss here at 238, and I don't want the pullback. And a bit consolidation above this region uh, would be good, because once the moving average catches up, and then the price again starts heading higher. So this is what a complete bottom formation looks like. So let's summarize. So the stock was in a downtrend, uh, and after that the stock started consolidating in a range. There was a low made, and after that no new lower low is formed, and the stock starts making higher lows. And there's a well defined range. The 30-week moving average is flattening, and after we get a breakout, always wait for the breakout, because that's the confirmation, right? So that's the confirmation. Once we get a breakout, then you can write the stock as it enters the stage 2 uptrend. That is the most favorable time to make money. So a small announcement. In the beginning of July, I finally launched my course, that is of price action trading course, where I teach all this stuff, this price action trading, where I teach from the basics, the chart, from basic your chart types, your candlestick, your patterns, and the risk management, relative strength, how to find the winners, and everything. So here are the topics that I have covered in the course. So I always start with the risk management, because that is the single most important part of trading or investing. So I start with risk management, then we have the basics of technical analysis, then we have the type of charts and how to use the candlestick patterns the right way, because uh, you'll see the difference, right? Online, if you look at the YouTube and some articles, that is not the right use of candlesticks. So I have taught how to use the candlesticks patterns in a right way, the trend analysis, which is really important, the doubt theory, and the stage analysis, my favorite part. Then we have the chart patterns and how to trade them, market breadth, which is a really important point, the relative strength analysis, finding the next leader, trading strategies, pivot point, VCP, and I've explained these concepts in a simple with examples. Then we have the risk management part 2 and the position sizing. So there are 12 parts total, divided into 14 videos, and the language is English. The language of the course is English. The price is 2000 rupees, just 2000. And the prerequisites are just the basic knowledge of the stock market. Rest everything else is covered from the beginning about trading. So the content is more than around 14 hours plus content, and you'll get the videos through YouTube private access for the lifetime. And here are the payment details. You can just uh, send the money on UPI. I'll post the link. I'll post the details in the description, and the form and the link to this Google form. You can check it out there. So I had two other stocks that I wanted to discuss with you, and one of them is this Aditya Birla Sun Life AMC. So if you see, it IPO'd back in October 2021, and since then it has been falling, and it has gone down from around 700 levels to it's now at 400 levels. That is a decline of 42%. But right now what's interesting is that after a steep fall, if you see here, uh, the price is showing some kind of a bottom formation, right. It's still too early to judge unless we get a clear breakout from this horizontal level. If you see here, why this area, because here price again took resistance here also, and here also, and there's some buying. Look at the wick, right. It's indicating there's some buying at these levels. Look at the size of the candle. So it's still early, it's still below the 30-week moving average, but it is showing some kind of signs of the bottom formation. So I'll just keep it in the watch list, observe it. We'll see if the breakout looks good, we'll think about it. And just for the learning purpose, you can just keep it in your watch list, and you just review it once every single day for a few minutes. And the third we have is the CAMS, computer age management system. So if you see, after so it also IPO'd back in 2020, October 2020, and after that you can see how beautifully the stock went up from around 1300 levels to 4000 level. What a rise it was. And after that you can see this was the buying climax. This is what we call the buying climax, where suddenly the price increases 30-40% in just few weeks. Look at the rise in the price, and then it's combined with a long wick, and followed by big wide range bearish candles and high volume. So after that we also had a gap down area here, and the price was in a downtrend, complete downtrend. But if you see here, what's happening, interesting happening, is that the 30-week moving average, which was acting as a resistance, again acting as a resistance right now, but kind of flattening right now. If you see here, this after this sharp decline, similarly as we saw in the case of the Aegis Logistic, the buying was absorbed very quickly, right. Sorry, the selling was absorbed very quickly. Like the stock was falling from April, and in this just 3-4 candles, the whole selling was absorbed. And now after that, the price has, and another thing to notice is that price has not broken this low, and it formed a higher low than the previous one. So currently, if you see, we still, it's not in a buyable position right now. It's still too early, but I'm just telling you how you can identify the bottom formation early. So here I'll be looking, if you see here, this whole region, look at the wicks here. It's clearly stating that the supply is present in this region. So this area, this level around 2590 to 2600, this 10-20 point range is clearly indicating that this zone is the supply zone. So unless the price breaks out from this level with good amount of volume, I need good amount of volume and the good wide range candle during the breakout. So unless the price shows that kind of movement, I'll still stay away. But it's also kind of a forming, if you see, it's also kind of forming, right, an inverse head and shoulder, right. It's also forming, but always remember, a pattern is, we can't call it a pattern unless it gives the intended breakout. So in case of inverse head and shoulders, we need a breakout here. So unless the stock gives the breakout, it's still anticipatory, right. It's not a confirmed pattern. I'm just anticipating it. So there's a difference between the confirmation and the anticipation. I'm sure you must know, but it's indicating some signs of reversal. And why is that? Because all the signs we discussed, after a sharp downtrend, the price again absorbs the selling quickly, and then it didn't broke the previous low. It started making higher lows, and we have a clear defined range here. So unless it gives a breakout above this level of 2600, I'll stay away, but I'll just keep it in my watch list and observe it. So that was it for today's video. I hope you enjoyed it, and do smash the like button and don't forget to subscribe it, because I'll be bringing such videos next. Next video will be about the IPO based breakouts. I'll be explaining what is the right time to buy the IPO stocks, because once they break out, they give a very sharp up move. I'll be sharing multiple examples, so that video will be out by next week or next Sunday. So do subscribe it, share it with your friends and family, and don't forget to like the video. Goodbye, take care.